Get rich slowly. Why time is your best investor. Jim Rohn. From the moment you first grasped the simple truth that wealth is not won in a day, but sown over years, your perspective shifts. Imagine sitting on the porch at dawn, coffee steaming in your hand, and tracing the lines of your financial plan as sunlight spills across the page. You realize that compounding is less a formula than a Francine, patient, unfailingly generous over time. You think back to your younger self, eager for overnight success, skimming headlines of billion-dollar exits and lottery jackpots. The desire to get rich fast thrummed in your blood like a baseline, pushing you toward risky bets. Speculative tech stocks, untested crypto tokens, flashy franchise fees. Some bets paid off, others left scars. But through every triumph and disaster, one ally remained. Time. In your first true investment, the modest sum you set aside from your paycheck at age 20, you planted a seed, $10 per week, into a low-cost index fund. It felt almost nothing then, barely a pinch of your take-home pay. Yet each contribution entered a gentle orbit of growth. Compounding dividends reinvested, share prices rising over decades. By year 5, you had accumulated enough that you felt empowered to learn more. You dug into company reports, landed on a promising technology firm making medical devices. You bought a handful of shares, treated them as seedlings in your garden. You checked on them monthly, but you resisted the urge to tinker to sell at every dip or jump. You learned that patience pays more than panic. Meanwhile, you dipped your toes into real estate. A small duplex in a neighborhood on the cusp of revival of fixer-upper, priced for neglect. You lived in one unit, rented the other, and poured sweat equity into the place on weekends. You learned to frame walls, paint, trim, negotiate with contractors. Each repair boosted your equity and taught you something invaluable about building value brick by brick. Year 10 arrived, and you looked back at your balanced portfolio, index funds, individual stocks, rental property, and even a modest venture stake in a friend's artisan coffee startup. You saw that the index fund had grown fivefold. The medical device stock had given you 10 times your purchase price, yielding dividends along the way. The duplex had doubled in market value, plus rental income. The coffee venture was still small, but poised for real traction. You paused to celebrate, not with a wild spree or early retirement, but by reinvesting profits with the same quiet discipline that got you here. You upped your monthly index fund contributions. You refinanced the duplex at a lower rate, using the cash out to fund a second property. You met with your coffee startup partner to plan growth, offering to reinvest your share of dividends. At year 15, the math began to astonish you. You calculated that your initial weekly $10 had grown into tens of thousands, and that growth had multiplied as you layered in fresh capital and let compound interest work its magic. You realized the real power wasn't in any single high flyer. It was in consistency, in time itself. In that moment, you understood what Jim Rohn meant when he said, "Time is more valuable than money." You can get more money, but you cannot get more time. His words echoed, "Your youth is a gift, your middle years your engine, your later years your harvest." Armed with that conviction, you made a simple vow to play the long game in every arena of life: finance, business, relationships, and personal growth. You set a new ritual each month. You'd review your balance sheet of assets and liabilities, not just dollars and cents, but habits and mindsets. You tracked progress, but you measured more: the consistency of your routines, the quality of your relationships, the depth of your learning. You saw that the compound effect applied beyond money. A single hour of reading a classic business book each week planted insights that bore fruit in your decision-making years later. A small daily habit of networking calls led to partnerships you could never have planned. A weekly practice of writing down 3 things you were grateful for rewired your brain toward abundance. By the 20th anniversary of your first investment, you could scarcely recognize your own life. The portfolio you once checked on timidly had grown into a robust mix of equity, real estate, private stakes, and cash reserves. The duplex had grown into a small rental portfolio of 4 properties. The coffee venture had become a regional brand, and you held a board seat. But more than money, you had confidence, the rock-solid conviction that slow and steady outpaces the sprint. You remembered the day you almost sold your medical device stock after a brutal 3-month slump. You nearly cut your losses. Instead, you held, and the shares rebounded to new highs months later. You learned that time smooths volatility, that temporary setbacks are the price of long-term rewards. On a crisp fall morning of year 21 year, 45th birthday, you sat on that same porch, coffee in hand, marveling at the distance traveled. You could have retired years earlier if you'd chased quick wins and failed. Instead, you built a foundation built on reliability, reinvestment, and unwavering patience. You rose from the porch and walked to your home office where your team awaited. You had grown from a solo saver into the CEO of a small investment firm. You mentored others in the art of slow wealth, teaching annual workshops, writing guides, and sharing stories of compound miracles. Client who turned $1,000 into $100,000. Over 3 decades, a family who used rental income to fund children's education. An entrepreneur who reaped steady dividends while building her business. Each story reinforced the same lesson. Wealth emerges from time, not panic. It thrives on regular contributions, reinvested returns, and the iron discipline to keep going when markets wobble and doubts whisper. Now, armed with 2 decades of experience and a firm belief in time's partnership, you look ahead with calm excitement. You set your next goals, expand your investment firm's impact to underserved communities. Launch a fellowship to help first-generation entrepreneurs access capital, and write the definitive guide to getting rich slowly for readers who crave real, lasting prosperity. You know, challenges lie ahead, market cycles turn, interest rates shift, unexpected expenses arise. But you're ready. You have the habits, the network, and the mindset that only time can forge. You've learned that the secret is not timing the market, but time in the market. A principle true for stocks, real estate, businesses, and life itself. With that, you offer an invitation to every reader. Start today. Plant your seed, no matter how small, into the fertile field of time. Water it with consistent action weekly investments, daily learning, monthly reflections. Tend to it with patient faith, knowing that each moment adds up, that each dividend reinvested, each habit compounded, brings you closer to a future defined by freedom, impact, and abundance. Get rich slowly because your best investor is time, and with it as your ally, you can build wealth that lasts for generations.